Hello students, we have almost come to the end part of your module 1. So this is the last part where we will discuss about three important topics. The very first one in the slide itself that you all can see will be discussing about Incoterms, which stands for International Commercial Terms, which have been used in the international market. The second part that we'll be talking about is all about export pricing quotations. What are the ways in which the quotations can be given in the international market by the exporter? And lastly, which has always been asked into your university examinations, is all about the FOB problems. I'll be showing it to you online on the screen itself. How are we going to solve the FOB related problems, the sums which have been called as. Okay. So to begin with it, let us understand different terminologies, different international commercial terms which have been used at the time of carrying out the international trade. So you all can see here on the slide, these are the several terms which are commonly being used by the exporter. You name it as Ex Works, which stands for EXW, free carrier, carriage paid to, carriage and insurance paid to, delivery at terminal, delivery at place, delivery duty paid, free along ship, and lastly that we'll be talking about is delivery duty unpaid. So to begin with it, let us understand what do we mean by Ex Works, which is very commonly called as EXW. So Ex-Works is a type of an Incoterm which is defined by the International Chamber of Commerce, where where Ex-Works makes the seller of goods responsible for packaging and leaving the goods at their own factory or a place where it is manufactured. So if I am an exporter, my job is only to manufacture the goods and keep it in my own factory, keep it in my own warehouse. Further, it will be the responsibility of the importer to come to my country or maybe to make some arrangements who can come to my country, to my factory and take the delivery of the goods. Okay. So the buyer or the consignee is then responsible for everything from the point of the goods being made available. It talks all about or what all work that the importer needs to do: loading goods onto transport, transporting goods to a port or a terminal wherever they want, shipping the goods, uploading the goods at the buyer's port or terminal, and transporting the goods to the end destination or a warehouse. So basically in all these Incoterms, we are going to talk about what is the responsibility of the exporter and what is the responsibility of the importer. Exporter का कितने हद तक काम है, and then we have to see the role of the importer. So in a very first one, we spoke about till the time the goods are manufactured and kept safely in the warehouse of the exporter is the job of the exporter. Let's talk about the second one, free carrier, which is commonly called as FCA. Okay. So FCA is a common agreement where a seller of goods is responsible for packaging and loading goods onto a truck at their transport hub or port. The seller is also responsible for export clearance of the goods at the port or terminal. Once the goods are cleared by the customs, loaded onto the vessel, being loaded and the shipment is accepted, responsibility shifts from the seller to the buyer to arrange the shipment and delivery to the end warehouse or the customer. So now we have step ahead. We have gone one step ahead. So Ex-Works में हम लोग सिर्फ बना के रखते थे. Free carrier में we are uploading or we are sending the goods till the water port. फिर later on from the exporters country का water port से importers duty begin to transport it, to load it and to get it into their own country. FCA is different from Ex-Works, where the seller is just responsible for making available the goods at their own factory or place of manufacture. The buyer is then responsible for everything else: shipping the goods, unloading the goods at the buyer's port or terminal, transporting of the goods to the end destination or warehouse. Okay? Further, let's talk about the third type of Incoterm, which is called as carriage paid to, CPT. So this is an Incoterm in which was set out by the International Chamber of Commerce in their Incoterms 2010 to guide with the aim of standardizing shipping terms and defining all of the responsibilities between buyers and sellers. So CPT is a common for large importers who have their own port agents that can manage the delivery of the goods when they arrive in their own country. However, the risk of the seller passes on to the buyer once the goods leave their country or port, despite the seller paying for the transport of the goods. I tell you, so carriage paid to the exporter makes all the arrangement to transport the goods also. He also makes the payment of the freight charges. What are the freight charges? The water transportation charges that they have. But once when the goods leave the country, the responsibility also shifts from the seller or from the exporter to the importer. Further, importer needs to take care of the delivery of the goods or getting in touch with the shipment to know up to when the goods will be delivered, what will be the rough time when the ship is likely to come into their destination. All those stuff, the importer needs to take a call, importer needs to take the initiative. The buyer is then responsible for everything else once when the goods are loaded into the ship. So what are the responsibility? The importer needs to check or it needs to ensure that the goods as they are being shipped, but not the paying for the shipment. Payment nahi karna hai, but coordinate karna hai whether goods are loaded, whether goods are in transit, or about to what extent it will come into warehouse. Is there any kind of documentation not being matched? All these things has to be taken care by the importer. Further, unloading the goods at the buyer's port or terminal and transporting the goods at the end destination or warehouse. It's not only about downloading the goods from the at the water port of the importer, but the exporter needs to take care whether the goods have reached to the importer's destination or importer's warehouse or not. Further, we have is carriage and insurance paid too. So CIP is an Incoterm where the seller is responsible for the delivery of goods to an agreed destination in the buyer's country and must pay for the cost of this carriage. The seller risks, however, ends once they have placed the goods onto the ship at the origin destination. The buyer can pay for the additional insurance during carriage of the goods. This risk is passed when the goods are received by the first carrier. Carriage and insurance paid is also eligible for any form of transportation. So CIP talks all about the first three, to aayega hi aayega. But along with that, one more add-on expenditure, what needs to take care by the exporter is insurance charges. See, though it is said that it is optional to take the insurance, but again, it is advisable and it is a said common fact that every exporter always tries to take the insurance because there is a huge amount of risk involved when goods are transported via water transportation to the importer's country. So by default the exporter takes this insurance for the transportation. Cost and insurance paid to requires the seller to pay for the cost of transporting the goods and also minimum insurance to transport them to the end destination. With CIP, the seller pays for both the transportation and the insurance to the destination. The seller also needs to ensure that the goods during carriage is normally always at a minimum cover level as the liability lies with the buyer at this point. Minimum insurance might not be adequate for the manufactured goods or high value precious merchandise goods that we have. Further, the fifth one that we have is delivery at terminal, DAT. What happens in this case? Under DAT, the seller clears the goods for export and is fully responsible for the goods until they have arrived at a named terminal at the end destination. The goods must be unloaded at the terminal that can be used within transportation mode. Delivery at terminal is used when the seller's responsibility includes the full delivery of goods up until the end terminal or port of destination, as well as the unloading of the goods. So when you talk about that, it talks all about till the terminal. That means till the importer's country's water port, the responsibility lies on the shoulder of the exporter. The seller pays for all the expenses incurred until the place of delivery, and the buyer pays for the custom clearance and taxes at destination. That is how the DAP works out. Further, point number 6, we have delivery at place. The word itself says that delivery needs to take place till the buyer's place that we have. Okay, so let's talk further about it. DAP is an Incoterm defining the buyer and seller's responsibility when moving goods. In this case, the seller is responsible for moving the goods from one country of origin right through the end destination, which includes responsibility for loading, transport, and unloading. Further, DAP means that seller bears the risk of an issue with the goods until the agreed delivery point. If there are any extra fees for unloading the goods, the seller must incur such expenses. DAP requires the seller to load, ship, and unload the goods at an agreed destination place. DAP can be used for any mode of transportation, and the seller needs to pay for import custom clearance, duties, taxes, or loading unload of the cost. Further, point number 7 that we have is delivery duty paid, DDP. So under DDP is used to describe the delivery of goods where the seller takes most of the responsibility. The seller or the supplier or the exporter is responsible for paying all of the costs associated with the delivery of goods right up to the named place of destination. It is also expected that the seller clears the goods at the export and import customs. The buyer is then responsible for unloading the goods at the end destination. DDP, that is delivery duty paid, can be used to describe ocean, road, or air transportation of goods, including multimodal transportation as well. Further, point number 8 that we have is FAST, that is free alongside ship. Under this type, the exporter is responsible for custom clearance of goods and delivering them to the vessel at the point of origin. Under FAST, the seller is responsible for delivering the goods next to the shipping vessel. FAST is often used for cargo that does not fit into containers, known as out of gauge cargo, as this would typically be transported to a container yard under the FCA Incoterm. The cost for loading the goods onto the vessel is the responsibility of the seller. The buyer is responsible for the cost of loading the goods onto the ship and all costs thereafter. The last one that we have is delivery duty unpaid. The seller is required to deliver the goods to the agreed upon destination in the country of imports. The buyer is responsible for the rest of the cost and further delivery of the shipment unless other terms are agreed in advance. So these are the various Incoterms that needs to be followed, that needs to be understood before we talk about the quotation. From your examination point of view, not that it has been asked many a times, but yes, somewhere or the other, maybe for your objective oriented questions also, you can expect some of the questions from this particular topic. Okay, so now let's talk about the quotation part of it. What do we mean by quotation? What do we mean by FOB concept? So FOB stands for free on board. Let me just share the slide. It's not a slide. I have not made a slide because we need to talk in detail. So I have my own notes because we will be talking about how it has been calculated, and FOB is going to be the base for solving the sums. Okay, so give me a minute. I'll just share my screen. Okay. So before we go ahead, let me explain you what do we mean by the word quotation. Quotation refers to, let us assume that if we want to build up a particular bridge for that matter, okay? So when we want to build up that particular bridge, we need to give an advertisement. We means the government will give an advertisement in the newspaper stating that a bridge has to be made by so and so period. So you can please give the quotation. So company A, company B, company C, they calculate what all expenses that they are going to incur. They'll put down their labor cost, they'll put down their material cost, the profit margin that they are going to charge, and a complete estimated cost that they will be incurring to make that particular bridge has been mentioned and has been submitted to the government. Government scrutinizes all the quotation in detail, minutely, and then takes a call depending upon the quality, depending upon the profit margin that they have charged, depending upon the past projects that have been done by the company. Based on all these factors, the government will take a call, government will decide whom that they need to give contract to. So quotation plays a very crucial role, very important role to margin or to put our product or our services in front of our seller, sorry, in front of our consumers or dealers. Okay. So when we are talking about the international trade, these are the three quotations that we will be talking about. The very first one that you have is free on board. Second one, we'll be talking about CIF, that is cost, insurance, and freight charges. And the third one that will, sorry, second one we'll be talking about CNF, that is cost and freight charges. And third one will be CIF, that is cost, insurance, and freight charges that we have. Okay? So let's begin with the first one. I hope the notes are very clear to you. Or I need to, just a minute, I'll increase or I'll zoom in a bit so that it is very much clear. Yeah. So this is the very first one, free on board, where we say that the responsibility of the exporter, responsibility of the seller is till the time the goods are loaded into the ship or till the time the goods are boarded into the ship, where the word itself says that all the expenses, see, we can just read it out under this contract, seller quotes a price which includes all the expenses incurred until the goods are delivered on the board of the ship. It includes, so what all cost will it include? It includes the production cost, the packaging charges, inland transportation, water transportation tak pahunchne ke liye if we have hired some tempo or some kind of a vehicle. So that is the inland transportation charges that we'll have to pay. Documentation charges, whatever fees or documentation charges that were incurred and that the seller has to pay. So it is the exporter who will has to bear it off. Obviously, profit margin needs to be added. And this is one part which I want to explain you is export incentives will be deducted. So whatever I have written here, I have also come up with it's not me. That is how we generate this particular formula. So basically, when we want to quote a price for any of the product, forget about we are dealing in the international market. Even at the domestic level, whenever we want to quote a price for a particular product, it is generally a cost plus profit. So same thing I have done here. Cost of goods, that is the cost that is incurred, the expenses that I've incurred to manufacture the goods, plus the expenses up to the board of the ship. That means inland transportation, whatever expenses that we have incurred, plus profit. This is the general formula that we apply when we have to quote a price. But since we are dealing in the international market, and because of that, government appreciates our efforts and they help us or they give us some kind of monetary incentives. Okay. So it is a known fact to everyone. It's a globally known fact that every exporter gets some kind of monetary incentives by their own government. Okay. So now when importer also knows that I'm going to get certain incentives, importer expects that that incentives or some part of incentives needs to be shared with them, because whatever trade that is happening, no matter the exporter is going to take a lot of efforts to make this trade happen, but unless and until the importer doesn't purchase your goods, we will not be able to go ahead with this contract. You know, in a very simple words, tali ek haath se nahi bachti hai. In the same way, the trade will not happen without importer. And understanding this fact, it is the duty of the exporter to give some part. Some part can all be 10% also, 50% also. It depends upon the mutual understanding of the importer and exporter. So depending upon the mutual understanding between both of them, the exporter needs to give some part of his incentives to the importer. And with that intention, we need to deduct, we need to less the export incentives from this. Are you all getting it? See, I don't want you to just by heart the formula, ratify and go and write it. No. If you understand it, you will be able to write it in a better manner and in your own words. Okay. So here when we are talking about FOB price kahan se aaya? So cost of goods, जो भी खर्चा goods बनाने के लिए लगा. Inland transportation, the vehicle which has been hired to take the goods from my warehouse till the water port. And profit, ये सबको add करना है and incentives को less करना है. That is how your FOB price ka formula generates. Because this is a formula again which we are going to use it for sums, and that's the reason why I'm spending good amount of time, efforts, example to explain you this. Okay, so yeah, that is one thing. Now let us talk about and let us see what are the seller's obligation, what are the duties of a seller to fulfill when you talk about the FOB quotation. So the very first duty is to supply of goods as per contract. Whatever things, do's and don'ts were mentioned in the contract, they need to see to it that they are following it. They are providing the goods in a very much same manner, bearing all the costs and expenses until the goods are loaded onto the ship. That's the second obligation, second responsibility. Provide the documentation to the seller, to the exporter. Inform the buyer about goods delivered on the board. Inform buyer about the name of the ship and possible date of delivery, that up to what extent, up to what time the delivery will be done into their port. Further, seller should also obtain bill of lading and forward the same to the buyer, because without bill of lading, buyer won't be able to take the custody of the goods. I'm not emphasizing the part of bill of lading because we'll be talking in detail about bill of lading in another few chapters that we have. Maybe in the last chapter, we will have a separate topic on bill of lading. That time I'll talk to you in detail about it. Further, we have buyer's obligation. So that we saw about what exporter needs to do. Now let's talk about what is the role of buyers. So when you talk about buyer bears the risk when goods are loaded onto the ship. Payment must be made to the seller as per the terms and conditions, or as per the terms of credit that was promised at the beginning of the trade. Freight payment and booking of the shipping space is also needs to be taken care by the buyer. So if you have understood this first kind of a quotation, second and third goes very smoothly. So what do you mean by CNF? That is cost and freight quotation. Let's understand the meaning of freight. Freight is nothing else but the expenses or the water transportation charges are called as freight charges. So in earlier quotation, the responsibility of the seller was just to manufacture the goods and load the goods into the ship. But यहाँ पे the exporter also needs to bear the freight charges. मतलब goods को load करके छोड़ नहीं देना है, पैसा भी pay करना है. Maybe later exporter might recover that money from the importer. That's a different story. But when you talk about cost and freight quotation, it is the duty of the exporter to manufacture the goods, to load the goods, to bear the transportation charges, the inland transportation, and also the water transportation that we have. Okay? That's the reason why we this formulas we are not going to use for the sums, but I'm still telling you. So how the formula changes when you talk about CNF quotation, FOB price plus freight charges. So whatever we have discussed here, this formula becomes a base for all the other two quotations that we have. So when you talk about FOB price, we are talking about all this, or the total expenses plus profit minus export incentives. All this have been clubbed together and mentioned as FOB price plus freight charges. Okay. So now let's talk about what is the seller's obligation and buyer's obligation. So the exporter, what they need to do, in addition to the FOB seller's obligation, he has to also pay the freight charges. मतलब पहले के quotation में जो काम किया वो तो करना ही है, that goes by default. But along with that, there is one more additional task. What they need to do is all about paying the freight charges, paying the water transportation charges to the authorities. Okay. What buyer needs to do? Buyer needs to make the payment for the insurance and also needs to make the payment for clearing the charges and import duties. So these two are the roles of the buyer. Further, we move upon the third and the last quotation, that is cost, insurance and freight quotation. For this, we take this second as a base. So we talk about cost to bear करना है of manufacturing the goods, इंश्योरेंस भी पे करना है और फ्रेट चार्जेस भी पे करने हैं टू द एक्सपोर्टर. अगेन ये सब अभी एक्सपेंसेस हैं, बट लेटर एवरीथिंग दे आर गोइंग टू रिकवर इट फ्रॉम द इंपोर्टर. दैट्स अनदर स्टोरी. बट अभी के लिए व्हेन वी आर एक्सपेक्टिंग द कोटेशन फ्रॉम द एक्सपोर्टर, exporter needs to clearly mention that these are the costs that they are going to incur. This is the insurance premium that they have to pay. These are the tentative freight charges that they will have to incur. Because all these expenses, all this risk, all these responsibilities will lie on the shoulders of exporter. Importer will just barely take the delivery of their goods. Are you getting? So let's go ahead by understanding the formula for CIF quotation. We can see it here. CIF is equal to FOB price, जो quotation 1 में था, freight charges जो second में था, plus marine insurance. So इसमें एक और क्या add हुआ है, that insurance cost also needs to bear by the exporter. It's as simple as that. Let's see what are the obligations now. When you talk about seller's obligation, the exporter's obligation, apart from the FOB seller obligation, he has to pay the freight and insurance charges also. Buyer's obligation is only to make the full complete payment of whatever quotation that was been given by the exporter, and also to pay clearing charges and import duties or other taxes, other duties that they may come across. So that is how the three important quotation. As I am repeating again, Incoterms कभी भी ज़्यादा बार long answer के लिए नहीं आया है. But yes, this quotations, though there are only 3 quotations that we have, but yes, the formulas are mentioned, the role of seller and buyer has been mentioned. So you all have enough material to write for the 3 pointers that have been given. Okay? So lot of times for long answers के लिए पूछा गया है, explain 3 quotations or explain 3 FOB quotations that is given by the exporter to the importer. So this is how these 3 quotations are to be highlighted. Okay, so we are done with Incoterms, we are done with quotation part of it. Now we will talk about a very important and last topic of this particular module, is all about the FOB sums. very important, very crucial, and definitely which will be asked to you into the exams. Definitely, for sure, it always be a part of the question paper, and you can straight away get 7.5 marks. It is for 7.5 marks, and if you follow the steps which I'm going to tell you, there is no way to cut out your marks. 7.5 dena hi hai. There is no other option for that matter. Getting? Chalo, let's talk about it. What will be asked to you into the exams? Can you see this blue color mark or highlighted thing? That is a question with that which will be asked to you into the exam. And this is how I'm going to, I have already made a solution, but this is how you all need to solve it, and I'll explain you how it is to be done. So before understanding the solution, let's understand what they have asked. Let us understand the question, what they want to ask us. So they have said that calculate FOB value of exports in US dollars. Let's break it. Let's make small sentences and read it. So they are asking us कि FOB value nikalo, FOB price nikalo in US dollars. So there are two things we understood, that we need to calculate FOB price and we need to calculate that FOB price also in US dollars. Okay? Okay, fair enough. This is what they're asking. So they're asking us to calculate this with the help of the following details. Fair enough. They have given us this details also to solve this particular problem. Okay. So let's understand what are the details given. So they are talking about raw materials, which is costing rupees 1,15,000. Labor, which is costing rupees 30,000. Packaging of the goods, which is costing rupees 15,000, and other chota mota jo bhi expenses hai, overall it has come to 20,000. Fair enough. So these are the expenditure that has been incurred to manufacture the goods. Then they have said that profit to be charged is 20,000. So profit ka wo log ne directly amount diya hai. We don't need to calculate it. Further, they have said that DBK. Now, what is DBK? It is duty drawback. But what is duty drawback? Duty drawback is an export incentives. Okay. So there can be a number of incentives, but generally in this sum, either they write it very much evidently that export incentives are so much, or they use the word DBK, that is duty drawback to be charged is so and so. So here they are trying to tell us DBK to be charged is 10% of FOB price, and exchange rate is $1 is equal to rupees 80. Fair enough. So what there are four details that they have given us. एक तो क्या क्या expenses हुआ वो दिया है. How much profit that we need to charge, that they have given. Export incentives directly nahi diya hai, but yes, they have given us some clause, something to calculate. And fourth one, they have given us the exchange rate of US dollars. ठीक है? तो ये चार details के basis पे we need to calculate the FOB price and that too in US dollars. ठीक है? चलो, let's go and understand how we need to go ahead. So the very first thing we have is raw materials. So this is how we need to solve it out. Let's club all the expenses together and find out the FOB cost. I hope you all remember the formula which we just spoke into the earlier document. See, I have marked it in yellow. This is a formula that we are going to implement. FOB price is equal to FOB cost plus profit minus export incentives. So FOB cost, ये सबको add किया. If we add all these expenses, we will get FOB cost. Profit वो लोग ने अपने को दिया है. Though export incentives we are not aware, but yes, they have given some clause. तो वो clause डालकर हम लोग solve करने की कोशिश करेंगे. ठीक है? चलो, let's go step by step. Let's calculate FOB cost first. So whatever expenses that they've given here, we have written that only blindly over here. You talk about raw material, you talk about labor, you talk about packaging, other charges that we have. ये सबके amount लिखा है. And then when we add up everything, the amount comes to 1,80,000 as an FOB cost. Profit को भी हमने add कर लिया because they have said 20,000 as a profit. So we added 20,000 as a profit. So what we got is FOB revenue. Now one thing I need to tell you, FOB revenue calculate करने की ऐसा जरूरत नहीं है. But let me bold and underline it. But many a times, but kabhi kabar in the question they ask calculate FOB value and also the FOB revenue. So it's better to have that habit of calculating this as an FOB revenue. So what is FOB revenue? It is FOB revenue is FOB cost plus profit. So 1,80,000 plus 20,000, which comes to 2 lakh. So whatever this 2 lakh is our FOB revenue. So now we wrote the formula, that is FOB price is equal to FOB cost plus profit minus export incentives. So this is how we have written the formula. Though the formula is easy, though this all additions are easy, चल ऐसे directly 1,80,000 लिख देते खत्म हो जाएगा, नहीं चलेगा. Let me tell you, the steps are very easy, very small, but if every step carries a marks, maybe your end answer is correct one, but अगर ये steps follow नहीं किए हैं, the examiner will also give you just 2 marks or 3 marks out of 7.5. So if you want to get the whole 7.5 marks, you need to do the sum step by step. Okay. So this is a formula what we have written. Let's replace the formula with numbers. FOB price तो अपने पास है नहीं because वही अपने को ढूंढना है. FOB cost है क्या अपने पास? Yeah, it's here, 1,80,000. So we have written 1,80,000 instead of FOB cost. Plus profit. Do we know the amount of profit? Yeah, it's 20,000. So we have mentioned it as 20,000. Export incentives पता है क्या अपने को? As of now, we don't know the export incentives, but yes, there is some kind of what do you say? Adjustment that they have given. So whatever that they have given, we have written in blindly. 10% of FOB price. जैसे दिया था वैसे हमने इधर लिखा है. ठीक है? Now this is a very simple calculation which we have done during our school days also. What is it? FOB price idhar hai and FOB price idhar bhi hai. So these are the two common factors that we have. So we have been taught that if there is something common, let us club them together. So there are what we have done. Listen to me now very careful. This is the only tricky part that we have throughout this sum. Rest all is easy. So what we have done, we have said that let FOB price be X. So jahan pe FOB price hai, we have mentioned it as X. So यहाँ पे FOB price है, so we wrote X is equal to, we just added this 2, so that becomes 2 lakh, and this 10% को we have put it into decimal. 10% मतलब 10 upon 100. तो ऐसा अगर आप कैलकुलेटर पे सॉल्व करते हो तो it comes to 0.1. And ये X कहाँ से आ गया? This FOB price is X over here. So X is equal to 2 lakh minus 0.1X. So we cannot minus this from 2 lakh. So what do? We ये XX जो है वो हम लोग एक साथ क्लब करते हैं. So we try to get this particular X का value on this side of the is equal to. So when they are shifting the sides, minus का plus हो जाता है and plus का minus हो जाएगा, right? So here when they have to come this side, it becomes X plus 0.1X is equal to 2 lakh. So X plus 0.1X comes to 1.1X is equal to 2 lakhs. So X is equal to 2 lakhs divided by 1.1. I hope you have got this. X single hai, matlab it becomes 1X. Okay. So 1X plus 0.1X comes to 1.1X is equal to 2 lakhs. And therefore X is equal to 2 lakhs divided by 1.1. So when we solve this again with the help of calculator, we get the answer as 181818. So that becomes the FOB price in rupees. Why is it in rupees? Because abhi tak whatever information they had given it to us was also in rupees. We never converted them, right? So whatever FOB price that we got right now is also in rupees. So ye rupees karke likhna zaruri hai. but they have told us very clearly कि उनको FOB price to US dollars में चाहिए. And also they have given us the exchange rate for the same. So what did we do? This is a formula for you know getting the export proceeds in required exchange rate. So we talk about export proceeds is equal to FOB price upon exchange rate. So FOB price is 181818. Exchange rate है 80. So 181818 divided by 80 comes to 2273. So that becomes your FOB price in US dollars. So this is how we need to solve. This is how we need to make our FOB sums. I hope it is very clear. Yeah, maybe perhaps it was there, but only thing it was hidden because of this box. So this is how this kind of sums you can expect into your exams. You all can see this. This is also the same thing. Only difference is here the profit to be charged is 5% of the FOB cost that they have given. They have not said that profit will be charged at 20,000. Direct amount nahi diya hai. But I feel it is not difficult for us to calculate with whatever clause that they have given. See here. Okay, I think I have mentioned it. Yeah, maybe that was just the question, but this is also more or less the same kind of a question. All the FOB costs, the expenses that they've mentioned here, and in the question itself, they've said that the profit to be charged is 10% of the FOB cost. So FOB cost is 1,90,000. Uska 10% come to 19,000, 19,000, and the FOB revenue is 2,09,000 for that matter. Getting? So this is how we need to calculate your FOB cost, profit, and FOB revenue. I hope it is very much clear, very much easy for you all to solve it out. Okay? It's all same for that matter. Only thing, we need to calculate the profit that they have said onto the FOB cost and the incentives on FOB price. These are just the questions for you all to do the practice. This is one very small, tricky, not tricky, but very small adjustment that you have to do it here. When you solve your costing related problems, here they have given that calculate FOB value of exports in US dollars for 1000 units. They have given us 1000 units के लिए calculate करना है. And whatever expenses that they have given it here, they have given it per unit. So raw material 500 per unit, labor 10 rupees per unit, packaging 15 rupees per unit. So we have to convert that into 1000 units. का कितना होगा? See this. I think here I don't know whether I have solved it out or not. But in case even if we have to solve it out, it can be just like this. Okay, I'll just show you in a minute. This is how I pasted it. And here 500 into 1000. Okay. So this comes to 5 lakhs. Okay. This comes to 10,000. This comes to 15,000. And this comes to 5,000. Okay, so this is how you get your, and if you want, you can mention it in the bracket also. You got this based on 500 into 1000. Okay, this you got it as 100, no, 10 into 1000. Okay, this is how you need to mention it. So these are only three very small. The rest all remains the same. These are only very minute changes or minute, somewhere here and there, twist and turn karke they may ask you. Otherwise, the formula remains the same. Those two formulas that we need to use it out, and the flow, the steps also remains the same. So that much you all need to remember. So this is where we have completed with your FOB sums, and this is where we have also completed with your module 1 for export marketing semester 6 syllabus that we have. So three altogether, there are 3 videos that I have made, starting from understanding the product, labeling, packaging and marking part of it. My second video focuses upon the branding and pricing part of it. And my third video focuses upon the Ecoterms quotations and the sums, FOB sums, that we need to do when we solve out this particular module. So that's all about module 1. Next time when we meet, I'll come up with your module 2. That is all about the distribution and logistic part of your export trading. Till then, bye-bye. See you.